Hello, everyone. I was a panel a few minutes ago, back as a moderator. This is Jaehyun from Ignite Capital. As mentioned earlier, I run a liquid fund doing on-chain stuff. So we've been yield farming on Uniswap since day one. Our whole company is a big fan of Uniswap. So it's a great honor to actually talk in a panel. So here's Drew from you. Can you give us a short intro?
Yeah, so Drew Turchin, I joined Uniswap about 2 months ago to run business development, partnerships, and ventures. I've spent the majority of my professional crypto career kind of on the institutional side. Started Galaxy Digital in 2021 on a special situations desk that focused on bringing Galaxy's operating business lines to more crypto native participants, mostly focused on token project market making, infrastructure as a service. We ran some of the biggest validator nodes in the ecosystem. And also did a bunch of strategic venture capital investments. I then went on to run the credit desk at Ledin, which is a big retail aggregator up in Toronto. Was running a $1.25 billion lending book until kind of the FTX crash kind of repivoted the business to more Bitcoin-backed loans, and have been an advisor to Clearpool protocol for the last 2 years. I've been focused mostly on Uniswap Labs API business, alongside growing the Uniswap X program and some of our other kind of strategic initiatives.
I mean, our engineers are very fond of the Uniswap APIs, and luckily, many protocols fork Uniswap to make their own. So it's kind of make our lives easier. So thank you for that. Yeah. So since the topic is the DeFi summer coming back, and everyone's probably hoping it comes back soon. So, and since our team is a totally big fan of Uniswap, so I kind of let them come up with the questions. So this is actually Ignite asking Uniswap some questions. So first question is, how would you assess the current state of DeFi market compared to the peak of DeFi summer? And what do you think is the key differences and the similarities?
Yeah, I think there's a lot of differences between today and 2021. A lot of it's like market microstructure, but back in 2021, before there were, in 2020 we started developing real applications. It was really about bootstrapping financial primitives like Uniswap and the Aves and the makers of the world. Where today we're kind of innovating and creating new concepts within DeFi. I've been most impressed with tokenizing yield within Pendle, alongside some of the RWA, bringing kind of off-chain assets on-chain as collateral within the ecosystem. I think also a big difference has been the kind of collapse of retail aggregators that we saw in 2021. So think of like the BlockFis and the Celsius of the world that had 50 billion in retail deposits. That used to be lent out and used to be farming on chain. There's a lot more capital to go around, and so today it seems like the user activity and price action is a bit more organic because there's a lot less leverage built into the system. There's also been a lot of interesting innovations on the swapping UX side with intent-based trading. We're quite bullish on Uniswap X that we rolled out last year, focused on supplementing the liquidity of the AMM with off-chain liquidity from market makers, as well as on-chain liquidity from solvers who can provide the same kind of aggregation experience. Also improves the UX by lowering gas costs and also saving users on MEV. So we're quite excited about that being kind of leading the way forward in DeFi spot trading.
I think that kind of leads to the next question, because you're talking about how innovative Uniswap X can be and how much upside potential that has in the DeFi space. So I wanted to ask you, what are the most exciting innovations in DeFi that emerged since DeFi summer, and how are they positioning the industry for a potential resurgence?
Yeah, there's been a lot of that. I mean, intent-based trading again, I think provides much better swapping experience for users across just getting better prices, putting people in competition and saving on MEV and gas costs. Yeah, aside from that, it's been a lot on kind of the making the LP experience a lot better. There's been a lot of protocols like Panoptic that have been able to help users mitigate impermanent loss and have made the LP experience a lot better, especially also with Uniswap v4. A lot of innovative hooks are being built to help reduce MEV and also create interesting projects like new oracles and TWAP ability and VWAP capabilities. So we're quite excited about that as well, being built open and in public.
Awesome. I think definitely along with the innovations, I think like scalability is something of an issue. You start off EVM and many layer two, you're adding it on, along with the ETH ecosystem. So, what do you think layer two scaling solutions are influencing the performance of the scalability of DeFi platforms?
Yeah, it's also been something that's changed, drastically since 2021. Back then, we did not have a modular vision yet built, so we just had Ethereum mainnet and some alt TVMs that, obviously got very congested quickly, and gas costs made the UX, pretty unusable across swapping and other, financial primitives. So now that we have, L2s, although ecosystems have become and liquidity has become a little bit fragmented, you definitely have, lower costs and higher throughput that have made a range of new financial primitives and DeFi activities actually attainable now. So I think with the development of infrastructure that will help bridge the gap between fragmented liquidity, I think we'll be in a better place fairly soon.
Do you think like many protocols who are sorry, Lynn, I'll just rephrase the question. So
Yeah.
Since it's but since when we're yield farming in Uniswap and we see all the other L2s, we just had a high hopes that Uniswap can scale up into non-EVMs and that will be like a dream come true for like liquid funds like us and along with our kind of high hopes, interoperability is like the major focus in DeFi space. Do you see that kind of development of the interoperability solutions is influencing the future of DeFi?
Yeah, absolutely. It goes back to the fragmented liquidity and users just having a tough time on the swapping and bridging UX. There will be a lot of developments made. I've been quite bullish on cross protocol. It's been quite easy, very easy UX, low costs. Been pretty interested in their solver network and the build out there. So hopefully we have stuff in place, especially for Uniswap X. Hoping to roll out cross-chain swaps in the next quarter or so. So that will definitely improve the experience for DeFi users.
I mean, cross-chain swap is something that always like the DeFi users are really hoping for, and
yeah.
Especially for us, like when you have to bridge everything and even though you're using Uniswap, like you have to bridge to chains and stuff like that. So, just out of curiosity, is there like an ETA for that?
Yeah, I'd say in the next quarter or so. Can't make any promises, but
yeah, I mean, hopefully that I think that can be a kind of game changer and kind of solve the fragmented liquidity.
Yes.
And but when it comes to like cross-chain swaps, I think like security issues can be another problem. Do you think like how do you think Uniswap will be handling those smart contract problems when it comes to cross-chain swaps or omni-layer kind of issues?
On the cross-chain swap, that's going to be mostly on a burden of the off-chain liquidity for market makers and on-chain solvers. They're going to be able to use their own infrastructure to complete and fill those trades cross-chain. Aside from that, on kind of the on Uniswap v4, that's being built out in public. There's about 40 different public contributors to the GitHub, and we've been hosting alongside the foundation. We've been hosting a lot of different hackathons and hacker houses and bug bounty programs. So that's the way that we're kind of helping chip into the security issue.
I see.
Yeah.
Do you think that when cross-chain swaps will be available, like how would the MEV attackers will come into play when that's on live?
Yeah, it's a good question. We've looked into it. We're still kind of figuring it out. Yeah.
I think that they won't fade away, but I think that kind of opens up like a more opportunity for them. Yeah, I see. Any aside of Uniswap, is there any other protocols or new narratives that you think you're currently monitoring? But you previously mentioned like about RWAs and stuff like that. So do you think any new narratives have potential growth coming forward?
Yeah, you're not going to really name any protocol specifically, but yeah, interested in kind of private credit markets being delivered permissionlessly to users on chain without having to KYC or AML. I've also been quite bullish on bringing more Bitcoin collateral on chain. We only really have wrap Bitcoin and a couple other alternatives today. Maybe you'll see bigger growth in TBTC, or maybe Coinbase bring wrap BTC, and having more collateral on chain leads to better opportunities, more liquidity. Quite bullish on that as well.
Like another additional question is kind of do you think like any institutions will come into play to use your protocol anytime soon?
Yeah, I think so. I mean, we have institutions kind of using the protocol, trading APIs today. We've started to really roll out and market bringing DeFi liquidity to the masses, and it's had quite a bit of success. I don't think it's something that people really focused on in 2021, the last cycle, and it's something that we're continuing to get the word out, letting people understand, exactly how AMMs work, how concentrated liquidity works, how Uniswap X and other intent-based trading protocols work, and how it brings a comparable UX to trading with an OTC desk, or trading with on centralized exchanges, or through different other trading platforms. Oh yeah, sorry.
So I think this is the most crucial question. As we look ahead, what factors do you think will trigger the next DeFi summer? I think, like, do you think that there are any like specific trends or developments that you think will drive like the rise and shine of the DeFi space?
Yeah, I think continued innovation from some of the different DeFi protocols we saw across the cycle. I mentioned Pendle and tokenizing yield, and bringing the financial primitives that we've seen in the traditional finance sector. Bringing them on chain, and making the UX quite good for users. I also coming from a traditional finance background, 8 years of derivative sales and trading. I think the macro environment's definitely going to help. I know everybody likes to talk about it on crypto Twitter, but I think if the Fed ends up easing to the tune of 200 to 250 bips over the next year or so, and you have the U.S. government continuing to run 6% deficits, and the labor markets seem somewhat strong, I think you'll see a resurgence in risk assets, and a resurgence in liquidity. I think you'll also see positive liquidity impulses from Japan and China over the next 1 to 2 years. And I think as we've seen with crypto, it's kind of the first place that liquidity flows. First to Bitcoin, and then to the rest of the DeFi ecosystem. And then I'm also bullish on hopefully getting traditional financial collateral, or being able to use Bitcoin and ETH as collateral within the traditional finance sector. Will bring a lot more liquidity into the ecosystem, being able to leverage those assets. We're like the only real asset class, 3 trillion or above, that doesn't have the ability to be used as collateral. So, except in our small on-chain ecosystem, which is thriving, obviously doing an incredible job, but there's definitely more that can be done.
Okay, I'm out of questions. Do you have any questions or any issues you want to bring about and talk about?
No, I think that's it. Appreciate everybody's support.
All right. Thank you everyone for the time. I really appreciate it. Thank you so much.
Yeah. Thank you.
Thank you.